Last week, something historic happened with the oil market and unemployment numbers, and the next week we are having a crucial earnings week. In today's video, I will be explaining everything, and at the end of the video, I will be giving you guys my expectations on Facebook, Visa, and Apple before the earnings report. Hello guys, welcome to another financial news video. I'm Adriana Gorrin, and if you're new to my channel, then welcome. Don't forget to subscribe, smash the like button for the YouTube algorithm, and follow me on my Instagram. First, I wanted to give you guys an update on the oil situation, why prices went negative. Last time I explained the war that was going on between Russia and Saudi Arabia, which Trump was able to stop. Now, the craziest thing is that a few months ago, a barrel of oil was at a price of $60. But after the pandemic started, a lot of states started lockdown, businesses closed, and a lot of factories had to shut down across the nation. All that caused an extreme drive on the demand for oil, and the price for a barrel went down below $20. Why? Well, cruises and airplanes are not traveling right now, and no one is driving to any place since absolutely everything is closed. Because of all that, the OPEC, or the Organization of the Petroleum Exporting Countries, got into an agreement of production in order to make sure that prices stays at a normal level where everybody or every country could make profit out of the production. The thing is that every country has different production costs. So if the barrel of oil stays at a current price, US players are going to be out of business sooner than expected, because they need the oil to be at a price of around $40 or more to be able to make profit. But there are other countries like Saudi Arabia or Kuwait that have the lowest production cost in the world, since it costs them around $10 per barrel. This means that if the oil price is at $10, they are breaking even, but the US companies are losing a lot of money. And even with lowering production rates, the capacity of barrels of both on land and sea in the US is filling up already. This has made storage costs to skyrocket based on the oversupply, converting oil more into a liability than an asset at the moment. All this situation can get even worse and affect the economy and banking industry even more. And why the banking industry? Well, as I said in my last video, just go and check out all the US companies' balance sheet and see how much they have in long-term debt. For example, ExxonMobil has a long-term debt of $24.7 billion, Marathon $5.51 billion, and Occidental Petroleum $38.2 billion. Who do you think is going to pay for those debts if this keeps going and they are not able to even break even? Now, I know all of you saw prices going to negative $37, but need to understand that that wasn't the oil price. It was May's oil future contract. To put things into perspective, a future contract is an agreement used to settle the price of a commodity like oil at a future date. Basically, this means that the buyer is willing to buy oil at a certain price on a certain date. When an investor buys one of these contracts, they have the right to buy 1,000 oil barrels. What happened was that no one wanted to buy oil during the pandemic, obviously, and everyone started selling their contract. The thing is that not only companies that really want to buy oil barrels can buy those contracts, speculators can too, making it even worse. I'm saying this because it's normal to see a bunch of speculators buying contracts, let's say for June, with expectations to sell it before its expiration date for a profit, and never actually buy or even touch a barrel of oil. The thing is that this time it wasn't only speculators selling, but also big companies that didn't need any more oil for May. So basically, those future contracts going negative meant that you were going to get paid if you decided to buy that oil future contract. Why that happened? Well, since we are having an oversupply, capacity is filling up and storage prices are skyrocketing. Maybe it was even cheaper for the holder of the oil future contract to sell it in negative than actually receive those barrels on May, then pay for their storage and wait until the demand increases back again, and then be able to sell it for a profit. The oil industry is one of the industries that has been hit lately, even before this pandemic. I think that in the short term, most of them could recover if this ends before expected. But in the long term, I don't think we're still going to use that much oil or gasoline. I'm saying this because almost 70% of oil is used for transportation. some countries and cities around the world have already proposed banning the sale of vehicles that are powered by fuel, such as Norway, Netherlands, China, India, United Kingdom, France, and some cities like Barcelona, Copenhagen, and Vancouver. They are all expecting to have this between 2030 and 2050. That might not sound far away, but that's only 10 to 30 years from now. I don't see this industry growing like it used to 15 years ago. Obviously, in the short and middle term, oil is still very important for transportation and commercial use. But in the long term, I'm seeing more go green environment, and the industry is already being affected because of it. Also, unemployment numbers increased by 4.43 million people last week. This means that 26.45 million people have filed for unemployment over the last 5 weeks. It really took only 5 weeks for the US economy to actually wipe out all job gains added over the last 11 years or since the Great Recession. And as I said at the beginning, next week is a huge earnings week. As always, in this little calendar, you can see all the companies that are reporting earnings next week. I'm saying it's a huge week because we have huge companies like Apple, Facebook, Amazon, Google, McDonald's, and Visa reporting earnings. I do have 2 videos already talking about what to expect for Amazon and Google earnings, and another one for Tesla, which I will be linking down below in the description or leaving a tab right here. But also wanted to tell you guys what I expect for certain companies like Facebook, Visa, and Apple. But before analyzing that, I wanted to give you guys an update from my Netflix expectations since they already reported earnings last week. They did beat revenue expectations by 0.38% since they had a $5.77 billion in revenue, but missed earnings per share by 4% since they reported $1.57 earnings per share. The good news, the amazing news, is that Netflix reported 61 subscribers in the US and 106.1 million international subscribers, totaling 167.1 million subscribers, which is over a 15 million people increase since December, beating the growth in subscribers expected by analysts. Now, let's start with the next week earnings. First, Facebook is a company that has been having an exponential growth for years, increasing their revenue like crazy. Their balance sheet can be one of the best balance sheets I've ever seen. In my Facebook stock analysis video, I analyzed it more in depth, which I recommend you watching it after this video. Facebook is a stock that has outperformed the market in the last 5 years. They have a total asset to debt ratio of 0.13. Meaning that they only have 13% of their asset financed by debt. What this tells me is that this company has grown a lot by acquiring way more assets over time. I'm expecting them to obviously have a huge increase on their monthly active users since everyone is at home using their phones, scrolling through Instagram or Facebook all day, or even chatting with people through WhatsApp. But I do think that they will show a slowing revenue increase since 98% of their revenue comes from ad spend. And with all this pandemic, huge companies had to cut expenses, starting with marketing costs. Second company is Visa. Visa is another huge company with an exponential growth. This stock is special for me because, as I said before, it was the first stock I ever bought. Their total asset to liability ratio is 0.52. Obviously, it's not Facebook, but still has a very good and healthy balance sheet. It has outperformed the market or the S&P 500 in the last 5 and 10 years. Even though they have reported an exponential growth in the past, I'm expecting a decrease of volume in their transactions, which will harm their revenue. And yes, I know people are at home and are buying more online and everything, but that does not equal the same amount of money or transactions people used to spend or do before lockdown. Let me know down below in the comment section what you guys think about this, but these 2 months I've seen my savings increase a lot. I think I have never saved like this before, and I know I'm not the only one. Then last but not least, Apple. I do have to say that I have a video planned out for next month on May to do a deep analysis on this stock, since I can say that it's my favorite company ever and I'm what people call an Apple addict. I simply like their business model, their products and services. They have outperformed the market in the last 5 and 10 years, and their balance sheet is very healthy as well, with a current asset to liability ratio of 1.6. Remember that I always want to see this current asset to liability ratio between 1.2 and 2, and 1.6 is incredible. They have a total debt to asset ratio of 0.74. Yes, it's a little bit high since I like to say it around 0.50, but still they are a cash flow machine. Since last year, they had a free cash flow of $63 billion. For this earnings, sadly, I think they might have a decrease on their earnings per share, or at least see a significant slow growth. I'm saying this because I don't expect an increase in iPhone or MacBook sales during this pandemic. I do expect a significant growth on their service since it has shown an exponential growth lately, and everyone being at home on their internet, reading news, watching TV shows, listening to music, and playing video games would boost that increase. Actually, that revenue source from services is the most important at the moment since Apple's retail stores are closed due to the pandemic. I do recommend you guys to go and watch all my Amazon, Facebook, Tesla, and Google analysis video before their earnings if you would like to have a more in-depth and detailed analysis. That was all for this financial news video. I hope you really enjoyed it. Don't forget to subscribe, smash the like button for the YouTube algorithm, follow me on my Instagram. Stay safe, stay home. Thank you and see you next time.